Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Tuesday, May 11th, 2021. We're looking at the pound yen on the 4-hour time frame. This is a break check pattern that formed right here at broken overhead resistance, now acting as a support level with this bullish spike candle that formed right here. Okay, so let me back up. I got into this market right here. This was a breakout. This was the check. It comes down, reaches within a couple of pips of this level, and I bought right there, going to my target with that one. As the market continues sideways, it rolls down, takes us out deep, okay, and now forms another bullish spike. Okay, so what happened here was at the close of this black candle, this was forming a giant black candle. Okay, so everybody is selling right here. They're putting their stops right above the breakout or the break line here. Okay, as the period comes to an end, all of those orders are taken. Okay, not only are those orders taken, the orders from everybody that went long here that have their stop loss orders sitting here. So this is a big collection of orders that's taking place right here. That's how the market moves. Let me zoom out and show you this overhead level. This is a solid consolidation area where then the market is pushed lower, consolidation, push lower, consolidation, push lower. Okay, so this is where the market really fell from, and then we see all these fake outs down here that reverse the market. Now again, the fake out that not only got us, but it got a lot of other traders going short here as well, where we didn't catch the short because we wait until the candle forms. All right, so this is an perfect example of an opportunity to turn this loser into a winner. So you lose one, you gain two, you're up one for the whole transaction. And this happens a lot when the market shows you what it's going to do right here with, like in this example, a break check, and then it decides to just go a little bit lower, forms another signal that you can also get into. T2 is right here. I'm floating my target above this level here. Okay, so it was a direct entry. The market pulled back for, I don't know, probably 5 or 6 pips so far into my entry line, and I wouldn't be surprised to see it pull back further, just because this is a pretty good size signal. We are looking at 62 pips on this signal. All right, around 60. So I wouldn't be surprised at all to see at least a 30 to 40% pullback, at least to this level. That would be right here to this level, before maybe bouncing from there. All right, but then again, it might just continue straight away. That's why we have to set up these trades so that we know where the stop loss is and we know where the target is. In this case, the target is going to be placed well below this level. Therefore, my interest is just to get into the trade right away. Okay, what if it doesn't pull back? So you have to have a method where you're not taking a set pullback just because it doesn't always pull back for you. Okay, and you don't want to miss these trades. All right. Okay, welcome back everyone. It's now Thursday, May 27th, 2021. Our 2 times profit target was just reached as we broke through this consolidation back in the direction of the original intent. So let me zoom in and kind of talk about this for a moment. We saw initially about a 40% pullback. The market rolls over, takes out that 40% area right here with about 45% retrace into the level. We bounced short one more time, and then the final push into the entry line before the week and a half of consolidation that led up to this big exhaustive move to the upside. Now, I don't particularly like to have my money tied up for 2.5 weeks on any one given trade. However, it's okay because we have a method to address that. Okay, what we do is we have an Excel spreadsheet, and you will value every trade exactly the same, no matter what size, no matter how large or small your stop loss is. Okay, your trade will be valued at the same monetary value always. For example, let's say, for instance, you want to have your stop loss worth $50. Okay, that means you're going to lose 50, and if you hit the 2 times profit target, you're going to gain 100. Okay, so you're going to be minus 50 or plus 100. So you set that up in the calculator based on the percentage of your account that you want to have at risk at any one time. Okay, depends on your account size. You can have as small as a $500 account all the way up to infinity. Okay, this calculator will work. You enter that value in. Now, for every trade, you set up your position, and you look at your stop loss. You go, okay, that's about 64 pips. You go to the Excel sheet, you look at the pound yen, you go across the 64 pips, and it tells you exactly the position size to enter, so that that stop loss will be valued at $50 and the 2 times profit will be valued at $100. Okay, that way every single trade across every single pair, no matter how large or small the stop loss order is, it's always going to remain the same. Okay, and when you have that consistency, your 2-to-1 risk reward becomes very powerful. It becomes a very powerful tool. Okay, so now at this juncture, we're going to be watching for new setups at these breakout levels. Okay, I'm not interested in riding this trade out to 3-4 times profit and trailing the stop. I'm interested in taking my 2 times profit and then waiting for future trades. The market's going to tell me what it's going to do next. It might reverse. We might break back inside of here and see an inside break check. We might bounce off of one of these levels back to the upside and catch retest. Okay, so it's just a matter of going with the flow. Let the market tell you what it's going to do based on the patterns and the setups. Okay, so if you like this setup and this pattern, the break check, click on the link above. I provided another video up there with a link to another break check video. Don't forget to subscribe, and we hope to see you guys on the inside soon. Have a great week.